Good afternoon and good evening, Marshall Reddick investors. Thank you all so much for taking time out of your day and taking some time this afternoon to join us on this webinar. Really excited to have you all on. Got the opportunity to speak with some of you throughout the day, and really looking forward to the information that we're going to be presenting tonight on what has been for many years now a very, very popular market of ours. But before we get into tonight's presentation, I know we definitely have some new Marshall Reddick investors on the webinar tonight. So I want to just take a moment, explain a little bit about who we are and what we do here at Marshall Reddick Real Estate. Marshall Reddick Real Estate, we are a full service real estate brokerage, 3 primary services. We essentially have the entire team in place so that you as a real estate investor can adequately evaluate and analyze real estate investments that are best suited to your specific goals and criteria. And we have all the key players in place in every market, like Austin, that we help our clients invest so that you can do so with ease, and so that you are doing the correct diligence up front, so that whatever you do invest in, it as closely meets your goals or exceeds your goals as possible, whether you are looking for cash flow, appreciation, a little bit of both. Whatever it is that you're looking for specifically as an investor, we have a market, we have investment properties suited to those goals and criteria. And one of those key team members, Seth in Austin, is going to be presenting on his market tonight, and we will introduce him in just a little bit here. But in addition to full service brokerage in our 16 markets, we also provide property management services for our clients, and we are a private money lender. A little bit about myself. I'm a real estate advisor here at Marshall Reddick Real Estate. I've been with the company for 3.5 years, working directly with clients to set specific goals and criteria dependent on what they're looking to accomplish with their investment property and portfolio. That includes working with beginners, those who have never invested in real estate, all the way to those with fully established portfolios. My background, I have my bachelor's in finance, but more importantly, in terms of my real estate background, it comes from a contracting and development end. So I've built houses, I've owned houses, I've sold houses, and I've certainly helped my investors evaluate markets and property and ultimately invest in markets like Austin. A little bit about the system and the process of working with a Marshall Reddick advisor. It really starts with initial phone calls, understanding why you're looking to invest in real estate. I think we can all agree, everyone on the webinar, that all of us have different budgets, different criteria, different risk tolerance, and depending on whether you're looking to maximize passive income or simply maximize your return, different markets, different types of investments are going to be most suitable for you. And once we determine what those are and set your criteria, we can really go through the entire process of evaluating markets, evaluating different properties, making sure financing's in order, and then getting you introduced to people like Seth in Austin, who can help you acquire an investment property that most specifically meets the goals that we have set. Now, it's important to note that no market that we help our clients invest in at Marshall Reddick is chosen at random. We have specific criteria that a market needs to um, hit in order to be one that we promote to our investors and help them buy and sell real estate in. And you'll notice throughout the presentation tonight that Seth is going to be touching on all 7 of these key points. And I just want to note that a lot of times investors will take pictures of slides or screenshot. Both Seth and I are more than happy to send over a copy of these slides after the presentation. They'll be available on our website as well. But again, the 7 criteria that you see here, you're going to see highlighted throughout the presentation tonight in explaining what makes Austin a great market for investment. These are 16 markets. Again, not chosen at random. All of these markets hit the 7 criteria that we had just gone over. But tonight, more specifically, we're talking about, again, one of the most popular markets amongst our investors for the last several years, and that is Austin, Texas. Right before we jump into our main presentation, we do like these presentations to be interactive, so we're going to do a quick poll here before we get started. Just note that these are completely anonymous. No one's going to know how you answered, but it does help us understand a little bit more about who we have on the webinar tonight and what you might be looking for. So without further ado, I will launch the first poll here. Again, completely anonymous. We'll take just a few moments here, but first question, I am interested in the Austin market for income potential to capitalize on an appreciating market. I have friends, family there, and I'm not really sure. I'm just here to learn. All right, just a few more moments and we'll get it closed up. All right. Okay, wow. An overwhelming majority, just over half actually, of our attendees tonight are interested in Austin for income potential. But with a fair amount of you answering every available option. So whatever it is you're looking for, there are investment opportunities in Austin to help the specific goals specific to income potential and appreciation. And for those of you that aren't really sure, hopefully after tonight's presentation, you'll have a little better idea of the investment opportunities in the Austin market. All right, without further ado, it's my pleasure to introduce our regional rep in Austin, Seth Joseph. We've been working with Seth for the last several years, really knowledgeable realtor and really a market expert. So I always learn something when I hear Seth present on Austin, and really excited for you all to hear Seth present as well. So Seth, I'll let you take it over from here.
All right, thanks for the intro, Daniel. And I'd like to extend Daniel's gratitude for everyone hopping on the webinar this evening. I really do appreciate you spending time with us and learning about the Austin market. I'm just as excited to present the current options in Austin and give you a sense of the basically an overview if you're not familiar with Austin. And I'll just tell you a little bit about myself. I have been a realtor since 2012. I moved to Austin in 2010, and I eventually wanted to start my own business. I saw real estate as the perfect sort of segue from my hospitality background. And if you could see there the accredited CNE, I'm constantly striving to further my education in real estate. These are designations that I've earned by taking courses over the course of my sort of tenure as a realtor. And yeah, I mean, I've worked. I don't really discriminate with who I work with. I used to work more with primary residents in the past, but now I've been working with a lot of investors like yourself, both buying and selling real estate, single families to multi. And I will hop to the next slide here, and we'll sort of get into the nitty gritty. Just a quick overview of our agenda today. Like Daniel mentioned, I'm going to try to touch on all 7 points in this webinar. And eventually I'll get to the hand selected inventory just for our investors, right? That I've handpicked for you. And so why Austin, Texas? I'm sure you've heard a lot about Austin, Texas recently. It's coming up in the news all the time. And the first reason that I would say that it does come up in the news all the time, besides our music scene, would be the economic growth, right? And secondly, a pro-business environment. Texas is very business friendly. We don't have a ton of regulations like other states. The economy is diverse. We have a lot of different jobs, a lot of high-paying jobs. Like I said, jobs, and jobs. Quality of life, also location. I mean, we don't, as far as Austin goes, we don't really natural disasters here. Sometimes outside of Austin, there might be some flooding. Other than that, it's a great place to be. We don't really deal with a lot of the other stuff that other parts of the country deal with. Increasing rents for sure, and for those of you who are looking for appreciation, you found the right place. I'd like to give an overview of the geographic layout of the greater Austin area right now. So as you can see, it's pretty much divided into 5 of the bigger counties. I'll start with Williamson County up in the north. You'll find the bigger cities like Round Rock, Georgetown, Cedar Park, Leander, Liberty Hill. These are the bigger cities that are located in Williamson County. And Williamson County, as you can see, shares a dividing line between Travis County. Anytime you mention Austin, most likely with an Austin address, you're talking about Travis County. Some of the cities inside Travis County, gave Rollingwood, some, Pflugerville is actually inside Travis County, and then we have our smaller neighborhoods as well. Out south of Travis to the southeast, you'll find Hayes County. In Hayes County, you have these very fast growing cities such as Kyle and Buda. And this is kind of a lead into while you're going down south towards New Braunfels, which is about halfway to San Antonio, and which is a huge corridor, by the way, into Austin. Out east, we have Bastrop County. Bastrop, the city, is a very quaint little town. It's mostly country out there. I mean, there's bigger lots and some developments as well. Caldwell County is even more country than Bastrop. So, but yeah. So I mean, for all intents and purposes, when I'm talking about most of these investment properties, mostly will be in Williamson County and Travis County as well. Here's just a little slide that I included. It kind of gives you if you haven't seen pictures of Austin, little logos, and just gives you an idea of the culture, right? You see a lot of people when they think of Texas, they think of the high plains or this or that, old westerns. But Austin is a very green city. One of the things that I love about Austin is that I can have I can be downtown having lunch amongst the high rises there in the skyline, and then 5-10 minutes I can be paddling with this dog in well, it's not a picture of me, but the green belts are very accessible. Great little hikes everywhere to watering holes. Obviously on the left there you can see the UT Texas Stadium. Right above that, Austin City Limits is probably our most famous festival besides South by Southwest. Of course, our Capitol building is in Austin, so it's a wonderful, wonderful town. And this is coming from someone who actually moved from New York City, where I was born and raised, to Austin, Texas. So if you can imagine that change for me, and I really do enjoy myself here. Just a few blurbs about Austin that you may want to know, and I would pay attention really to the first um, little bullet point. I mean, that population growth is really something. Also, median family income 73,800. That's more than the national average. So that's telling you a little bit about our just who we attract into Austin, right? Some projections: the 2015 population of 2 million. I believe at this time it's about 2.15 million, which is, uh, right on track for that huge 2040 projection. This is when I say Austin, Round Rock, Texas, it's basically the greater Austin area. Okay. Now, here I'm introducing on this screenshot some of our major big box employers. And obviously, I don't have to repeat any of these names because I'm sure you've heard of them by now. But if you weren't aware of just sort of the depth to which the major employers are coming here, either to Austin or even attracted to the Central Texas area because we're just a lot more friendly towards um, uh, these businesses, right? How many do I have to click here? And really, what's the theme behind that is the tech industries, right? And Austin has been dubbed the name Silicon Hills, kind of a play on words from Silicon Valley, because technically we're really not in a valley. We are basically in hill country. And the one thing that I'd like to point out about this slide is that all these big box name companies and major employers, they're not just concentrated in one area. If you look to the left here, small bee cave, and I'm actually going to show a two properties that are in bee cave, and no one really discusses bee cave when they talk about the tech industry. However, as you can see, it's really all over South Austin. Here's our airport down on the bottom right, which is being expanded because we just need to expand to accommodate all the business and flights going in and out. If you can see where it says Austin, that's basically identifying the downtown area where you'll find Facebook. Dropbox is downtown. And then the UT campus, just a little north, you can see Oracle up there. Oracle actually just opened up another big campus in Southeast Austin, actually close to where I used to live. And as you go up further north, I mean, just look at all these companies, and I'll try to touch on all these areas if I can during the course of this presentation. But again, I really love this slide. I think it gives a really great perspective. And the reason I put this slide in here is actually manyfold. If you look at that graph, it kind of reminds me of an index fund, right? And when I think of index fund, I think of steady. I think of no huge peaks and valleys and something that's very reliable. If you look at the table on the right around, if you can identify the years 2008, 2009, 2010 on this chart, what you'll notice here is that after the crash, Austin only got hit negative basically 2/3 of a percent, so less than 1%. And we bounced back right afterwards to a positive. Can't really explain this little negative 1/4%. Not sure what to say about that. However, if you look at the rest of the chart, you'll see that these numbers are very strong and they're very stable. They're very steady. And the reason for that is the economic diversity, the economic strength, the money that's being into Austin, and the reliability of it, right? Just as a reference point, if you live out west or have experienced, if you were out west when you experienced a crash or even a few years before the crash, what I'd like to point out in Los Angeles is this up and down, these peaks and valleys, as opposed to the median, or excuse me, as opposed to the appreciation trend. And what this shows me is that it's not, a lot of these other cities aren't able to withstand a economic crash like Austin did. Okay. And if you look at the same years comparatively to Austin, 2008 through, or excuse me, let's look at even 2002, where you see these double digit numbers, which are completely disproportionate with the rest of the country. And then when it hit, look how hard it got hit. I mean, I'm probably preaching to the choir to a lot of people who are in LA and at this time. So quite a few years more for it to recover than Austin. And I'm just gonna, I'm not gonna point out all the figures on this little infograph here. One of the best, I guess, statistics here. I mean, if you look at the median price for single family homes, up 7%. It's very strong, and that's right where you really want it to be. The down on the bottom in the middle here, with the total dollar volume of single family properties sold, we're up 20% from last year. Another 1.1 billion. It's going strong, very strong and steady, strong and steady. That's what we want. However, if you look at the months of inventory on the right, you'll see we're kind of below what's called a neutral balance market. If you see where that asterisk is, we are. So what this means is that we're technically in a seller's market. So we have low inventory and we have a high demand. So neutral markets, for example, balanced markets will be somewhere between 6 and 7. And so there's still a lot of competition out there, okay, for home buyers who are looking for homes, and they just can't build these homes fast enough for the affordably priced homes. So I'll point out this first quote here: real estate demand is there because the jobs are there. And, that can't be, that's basically, what I've been trying to stress for the past 10 minutes here. I mean, tons of employers keep moving here year after year. And if you weren't familiar with this, when Amazon was planning to have their second HQ, Austin was on that short list. Austin was definitely up in the top 5, if not top 3 places that Bezos wanted to move. So that just tells you a little something more about, people's sort of view on Austin and how they think of it as a vantage point for their company. And just a few more, quotes for you. Again, you can grab these slides from Daniel or I if you choose, but I'll stay on here for just a moment more so you can kind of take this in. And the last bullet point here, this is very true. the home values are rising, and um, what's happening is there's what's called a suburban sprawl, right? So we're trying to keep up with the demand. It's a little difficult. We're trying to think of new ways to help keep people inside the city of Austin, so there's not as much traffic. Now, one thing that I'm sure you investors are interested in hearing, especially for those looking to buy and hold, right? Some of the highest rent prices in America. And this is what I'd like to stress about this is that, when you look at the properties that I'm going to present today, look at it sort of with an open mind, thinking, well, if I'm not exactly getting the cash flow, the exact cash flow that I'm looking for right now, well, hey, I can rely on definite rent rises. I mean, this infograph kind of shows it in a way, and not only that, um, people are willing to pay for it just because of the locations. However, one thing that I would like to point out is that even though the rents are on the rise, well, Austin still is considered among the best places to live affordability wise for the cost of living, right? And we're in this red graph right here. Excuse me, red column.
I just want to jump in here and point out that all the information that Seth's going over this evening, we have in this really convenient market data packet. The link to it is down there. Again, this is something that Seth and I can send over via email as well, but it just goes into a little bit more detail about some of the points that we had talked about the Austin market, the economy, the housing market. And in addition to this market data packet, there's a wealth of information there. So I highly encourage you all to check out our website and do as much research as you'd like.
All right. And actually, one thing that I'd like to touch on, there's 2 points that in that presentation I might not have touched on that I can just tell you just from experience as far as vacancy rate goes. We're at 97, 98% vacancy rate. And that's been true since basically the time that I moved here, since 2010. Um, and a lot of people are curious about the fact whether Austin is a landlord friendly city, and we definitely are. Not to say that we treat our tenants, not to say that they get, um, uh, you know, but the landlords do have a voice here for sure. Um, Education wise, well, I think I'm gonna actually go into that a little bit more when I start talking about the hand-picked investment properties. So let's get into it. I included this slide just to give a more granular look at the areas that I will be addressing, right? And so with the first large circle up at the top, Georgetown, as I mentioned, that's in Williamson County, okay? Pflugerville is actually in Travis County, but it's its own city. As you go to further down south, this main highway, Highway 35, it's Interstate 35, as you pass through Austin and downtown Austin and make your way south, you pass the city of Buda, has its own downtown, and Kyle. Again, these two cities are some of the fastest growing cities in Austin, and these are where some of the people who are living, obviously, in this quote unquote suburban sprawl are heading out to. And finally, touching on San Marcos, I don't really do business in San Marcos. Not to say that I can't sell San Marcos, but um, it's really like it's not a market I'm familiar with. And when we talk about the Austin area, it's not really where we want to concentrate on. I'm just kind of giving you an overview. And then finally, New Braunfels, as I mentioned, is halfway, just to give you some reference point of how far, Buda and Kyle are away from Austin. Little reference point, New Braunfels is about halfway to San Antonio. And depending on how you drive, you can probably get to San Antonio in about an hour. And from Buda and Kyle up to downtown Austin, without traffic, you could probably get there. Kyle will take you about half an hour, and Buda could take you about 15, 20 minutes. All right, cool. So we're here at the first property that I'd like to present. This is in Northwest Austin, right? And you can't see from these, obviously you can't see from this photo, but feel free to look this property up because it's, offered to you as investors on our website, most importantly. But this whole interior is remodeled, okay? And it's not very easy to find remodeled homes that, if you look at the top right here at the list price, that are less than 300,000. As far as so yeah, we're coming in with a 3-bedroom, 2-bedroom house, full story, single story. I labeled it an A-class property because of the finish out, right? Beautiful finish out. Square footage is 1347, and if you can read on the bottom left, you can sort of read the description of the house there. Again, feel free to look this property up online. Again, coming in at 297.5 and I'm just gonna actually go over, for maybe the less seasoned investors, I'm gonna kind of go over how closing costs and investment capital needed are concerned. So the down payment, I put in a 25% down payment. Reason I did that was because typically your loan terms will be a little bit more favorable if you put down 25%. Not only that, you'll have a better chance of cash flowing. Since this property is already updated, I really only put an initial repair cost of $500. And closing costs, they estimate at 3%. For those of you who are it's been a long time since you purchased a home, or maybe this is even, the first time that you're purchasing a resale or whatever, just briefly go over your closing costs at 3% will include your hazard insurance, which is your home insurance. So you usually have to pay at least a year, if not 14 months of that. And then a lot of those closing costs also are the taxes, which are prorated, rolled into your closing costs. And then there's some other prepaids and etc. So if you 74,000 and change for the down payment, $500 repair costs plus the 3%, well, you'll end up with estimated 83.8. I put the gross rent for the monthly rent in at $1,750. I like to be conservative when I'm posting these properties online. I don't want to give a false impression. I think that you might even be able to get away with $1,800 for this property. However, like I said, I really don't want to give a false impression. And one of the things that you'll notice if you look at the row for the taxes, some people, this might be a huge figure that they're not used to seeing. One thing about Austin is our taxes are pretty high. In general, in Austin, I'd say as a good sort of baseline, just to get used to, is 2.5% of the assessed value. And the assessed value is at the tax assessed value is actually not the sale price like it is in California. It's actually whatever the county assesses the property at. So these annual taxes divided by 12, coming in at $423.83 a month. So the next line will be your management fee, 7%, and we'll go into a little bit more detail about the property management. Not too much detail, but a little bit more. 7%, that's a pretty low fee. I mean, very competitive. So, and that's uh, rent minus vacancy. So you don't get charged for any months that are have a vacant, no tenants inside. The next three lines, HOA fee. Well, this property is not located in a homeowners association, so there is no HOA fee. And of course, the tenants in this case will be paying for the utilities and the landscaping. So if you look at this fixed monthly expense, um, what they're really attaching, uh, your basically your PI, TI, insurance, and all this other stuff, coming out to 1758.74. So at an estimated gross rent of 1750, you'll be coming in at a loss for the next line for monthly income at a slight loss for $8.74. Again, these are just estimates. I don't know what interest rate you would qualify at, but it's, I want to kind of stress throughout this time that it's the Austin market. We rely a lot on appreciation, and you won't find the same ratios that you find in other markets for sort of that golden ratio of purchase price to rent price of 1%. Say you buy a property for 200,000 and you're expecting a rent of 2,000 a month. Well, that's just not plausible here in Austin. And so you can find that great ratio in other markets, but you're not going to find the steady growth. You're not going to find that appreciation. And in this particular area, one of the reasons put this home on the market was because of its location, um, very close to all those major employers in the Northwest area. And of course, the new Apple campus will be coming in the next year or two, and pretty much within a few minutes drive of where this is located.
Yeah, and Seth, I just want to sort of add to what you had just mentioned. Um, the monthly income and the adjusted monthly cash flow that you all see on your screen right now, while it is negative, it is only indicative, or it only represents the cash flow aspect of your return, and it doesn't factor, it doesn't represent your appreciation, your principal pay down, your tax benefits. Um, the the total return that you see at the bottom of your screen, your 15-year projected profit and 15-year annual ROI, that's representative of all the ways you're seeing a return for this property. And like Seth said, Austin is a phenomenal market for steady appreciation with low volatility. It's great for investors who are looking to build long-term wealth. It's great for investors who want to minimize their risk, who are looking for strong and stable tenants. So, and keep in mind, this doesn't factor in any increases in your rent over 15 years. So eventually you will increase your rent. And you will be cash flowing as well, certainly when you pay the property off. So this is just initially, you may come out of pocket a little bit for this property specifically, but you'll be appreciating very steadily right off the bat.
Yeah, all great points to bring up for sure. I really like this property as far as affordable properties go in Austin that are already updated. So let's switch to the next slide here. All right, and I included a multifamily in this equation as well. Um, this is in Central Austin. Okay, it's a fourplex, and if you look below the, uh, if you look at the 3.5% annual appreciation, that is 0.5% less than single family, because typically, and not in every case, typically single families appreciate a little better than multifamilies. So again, this is a fourplex. 3 out of 4 of the units are currently rented. Altogether, there's 6 bed, 4 baths, and just a little over 3,600 square feet. right? And if you can read, so there's one unit that's currently not occupied, and as a fully occupied, fully functioning fourplex, the total rents would equal more than $5,000 when fully leased. And they've done some pretty nice updates to this, ones that really count, like electrical and HVAC. Not sure about the roof. Obviously, looks like the original. I'm not sure how, but and before I even get into this property, I called the listing agent today, and he had said that they received at least um, one offer on it, and so I wouldn't be surprised if it was already pending. Because if you look at these numbers, actually, if you just skip down to the monthly income, what you'll notice here is that it's a positive of $1,200 a month. So I'm not going to go over every single line item that I did for the others, but the list price towards the top, you can see is just under 650,000. I put a down payment, a significant one of 30%. Um, Initial repair costs, $1,000. Again, I'm just estimating. And I added up the gross rents for the current rent roll. And again, for when I look into properties that my investors are interested in, I don't just go by the numbers that are on the MLS. I definitely want to probe them for their rent rolls and get my eyes on the leases before we even make an offer, just to solidify and sort of confirm those numbers as well. Now, again, monthly income coming in at 1,201, and the I think this would be a great rental property for someone looking for a multifamily. You know, and people's sort of goals and how should I say this, tastes differ. So for those of you who are wondering, well, why would someone purchase a multifamily versus a single family? What are the pros and cons? I'll just lay it out real quick, just a few that you might be wondering about. If you have a single family, and if it stays vacant for maybe 1 month or 2 months, well, there's no one in that property, right? So you're losing money. But if you have a multifamily, well, you have a better chance of not being completely, I mean, you might even break even, or you might, if you might have some cash flow if a few of those units are rented at the time. The one disadvantage I would say to having a multifamily versus a single family is that in these multifamily properties where there's only 6 beds in 4 units, so two of these units are 2 beds and the other two are single beds. They're single bedrooms. Well, you'll have a lot more transient in general. I can't, it's a blanketed, I'm saying a blanketed term here, but you'll have most likely a lot more transient tenants, right? Not staying for as long because you're not getting those families into these single family homes. So it's possible that they won't take as good a care as a single family home if they're trying to stay there for a while. So there's a lot of pros and cons, obviously, between single family and multifamily. I'm happy to go into even more depth with you if that's something you'd like to explore at some further point as well. Anything to add, Daniel?
No, just that as you can see here, this is an opportunity to see positive cash flow right off the bat in a market like Austin, where the purchase prices are a little higher relative to the rents. Multifamily is going to be your best bet, but you can see it again, 15-year projected profit and ROI,
Yeah.
similar to the last property at nearly 16%.
Yeah. And by the way, I don't find these properties every day. This is actually kind of, I mean, that's why it probably most likely got scooped up after a day on the market. It is a really good cash flowing property, probably the best that I've seen in a while. So if you are interested in multifamilies, have a little patience if you are looking to cash flow right away. But happy to find that perfect property for you. I'm gonna move on to the next property here, and here we're gonna explore a property in Georgetown. Tell you a little bit about Georgetown. Georgetown, as I mentioned, it's in Williamson County. It's way north of downtown. If you look at the top left here where the circle is over Georgetown, you see it's even above Round Rock. Some of the, I guess, landmarks in Georgetown would be Southwestern University. Okay. Um, Also, they have a lot of golf courses. The San Gabriel River runs through Georgetown with some really nice sightseeing. And not only that, they have a very historical downtown area that is kind of hip and trendy. There have been a lot of flips in that historical area. These old bungalows, mid-century bungalows, being flipped and remodeled, and it's taken pretty well to that area of Georgetown. Some people who live in Georgetown, they would travel south to the major employers in Round Rock, like Samsung and Dell. Some of them, might work at the university, but in general, it's a much smaller city than Round Rock. All right, so here's a pretty newly built single family home by D.R. Horton. Has a beautiful interior, very light, very airy interior. Built in 2016, and one of the points that I like to stress about finding properties out in Georgetown and Round Rock area versus maybe Central Austin or South Austin is that you have to make that decision within yourself about whether what works for you. Do you want the homes that were uh, built in the 2010s and not as close to the major employers where you might be able to save on maintenance, or are you looking to invest closer to the tech companies in like the Apple campus and the new Apple campus, and basically there's a second downtown area in Northwest Austin. You can see from the slide from before, but you're purchasing older properties, most likely built in the 80s, and much higher price per square foot. And sometimes you'll get the same gross rent in those areas as you will for these Georgetown homes. However, you have to consider, okay, what are my goals? Am I looking for appreciation or am I looking for cash flow? And of course, these are the things that I always discuss with my clients to try to, like as Daniel mentioned, to try to really get down to what your goals are, because not everyone has the same goals when they're investing. If you are looking for, more of that less hassle, less maintenance home, definitely look in these outer areas such as Georgetown and Round Rock. The list price, for example, for this beautiful 3-2 built a few years ago, significantly less than the single family home that I showed you that was way closer to Central Austin area, right? So we're looking at a list price of basically 240,000 to 25% to give you more favorable loan terms, most likely. This I put the gross rent at 1650. Again, I was being pretty conservative. You may be able to pull 1700 from it, but if you're looking at the monthly income here, you'll find that we're in a positive cash flow of $98.56. Again, that's estimated, but one of the things that you can count on as far as the variable sort of variable expenses. If you look at estimated maintenance, well, this is at 6% of rent. as opposed to the maintenance of the home the single family home that I first showed. That's going to be more like 8 to 10%. Okay. And the reason for that is because this was built in the past 6 years. So we bring the estimated maintenance down to 6%, might even be lower. And so, yeah, I don't know if you've read the description, but just really nice, finish out. And I think an investor would be pretty happy with this home and find a nice tenant for it with this rent amount. All right, and I am showing you a slide of the tech companies that are not the big box names that you're used to hearing, but actually the smaller, either the startups or the the mid cap companies. There's Solar Winds, there's Accenture, and one company that was actually I had difficulty trying to get it to show up as a pinpoint. If you look to see on the left hand side where it says Oak Hill, well, right at the intersection of that 290 and West William Cannon Drive is a little company called AMD, right? And AMD, when I'm being, sarcastic when I say little company, because that's a huge, huge tech company. And the reason why I'm showing you this slide is because these are companies that are located along the Southwest Parkway, which is in Southwest Austin. Okay. And the next slide here, I'm actually, this is a home that's in Bee Cave, which is just maybe about a 10-minute drive a little further up Highway 71. And the reason why I'm showing this home right now, I actually just sold this home to our preferred lender, Reed Hazard. And I don't know if you guys have worked with Reed before. If not, I highly recommend working with him. I'm guessing, if there's a few Marshall Reddick veterans on here that you've had probably a great experience with him. But he was very interested in this Bee Cave area when I presented it to him, because he saw the value in it. And I closed on this home last week, and just look at the home basically in Northwest Austin. I believe that home was built in the 80s, 1983. Well, this home was built in 2012, and this has a fantastic view of the hill country. We got the list. It was originally listed at 590, and he was able to purchase it at 570. Okay. Monthly income wise, well, I can't substantiate these loan terms. I don't know exactly all of what he's paying on each of these, but I do know he's cash flowing. And the reason that I bring this up is it's a good segue into the next property in Bee Cave, which is actually an active listing. And this is a active listing that is very similar to the one that Reed purchased. And another reason why I'm showing you these properties is because the tax rate out in these particular areas of Austin and Bee Cave is less than 2.1 compared to say 2.3, 2.4, and 2.5. Well, that really helps your bottom line, believe it or not. And this list price, and if you are interested in this property, this list price, in my opinion, is probably about $20,000 to $25,000 too high. And it shows because it's been on the market for a while. But it's monthly income wise, it's showing positive cash flow. So I think this would be a great choice for anyone who's interested in a home that was built in the last few years, would get great quality tenants, is super close to all the tech companies that nobody really talks about, but they're all over Austin, especially on that Southwest Parkway. And this area is only about 10-15 minutes away from downtown Austin. So you can get to Austin really quickly. And it's just a great place to be. Very nice community, very safe, and also has is a part of the Lake Travis School District, which has only 8, 9s, and 10s in their schools. So again, this is kind of what I call a sleeper section where not every investor is too keen on here because it's not in central Austin. But I think it would be, I think you should definitely, if you can, if you're sort of in a position where you can invest in these higher end homes, I would definitely consider this as a great investment. All right, and then I know we're kind of running out of time here, so I'll just, again, I've sold a lot of properties in Round Rock as well. I might have mentioned this, but Round Rock, there's Dell is in Round Rock, Samsung, and it's super close to the quote unquote second downtown of Austin. There's tons of tech companies, where if you look at the top right, you see the map where it says Round Rock. In this Jollyville, McNeil area is where a lot of those. Anyway, Round Rock is divided into Round Rock East and West. It's divided into East and West by Interstate Highway 35. And there's the Dell Diamond Stadium outlets. There's, close to the stadium in Cedar Park, and the Round Rock Express, which is our farm team baseball play up there as well. And I didn't really touch that much on Pflugerville, but there are definitely investment opportunities in Pflugerville. You'll find a much better dollar per value, and Pflugerville has a downtown. A lot of it is farmland that's ready to be developed. There's tons of new developments in Pflugerville. All right. So, and like I said, I don't want to spend too much time on this stuff, but if you are interested, I can definitely send a lot more sort of details and information on these areas.
Awesome. Thank you so much, Seth. And thanks everyone for sticking with us. Almost wrapping up here. Just want to go through sort of the fee structure for property management here. The cool thing about markets like Austin is that we actually have an office out there in Texas, Marshall Reddick office. So just like myself, Seth is a Marshall Reddick employee, as are our leasing agents and property managers out in Austin. So really a one-stop shop, really simple and competitive fee structure that you see there on your screen. And of course, those are the fees that are factored into the pro formas and the properties we had gone over today. And of course, in our follow-up, we can provide a lot more information on what property management services entail. Before we wrap up here, we're going to go ahead and do one more poll. Again, completely anonymous, but does help Seth and I sort of understand the criteria and the interest of those investors on the call today. So I'll go ahead and get this poll launched here. The property that most interested you all this evening. All right, just a couple more moments here.
All right. I'm excited to see the results on this.
All right, here we go. All right, an overwhelming majority interested in the fourplex tonight, which doesn't surprise me. phenomenal returns on that investment property. But then, of course, the Georgetown home and the Bee Cove property as well. All right, thank you all for participating. Really do appreciate that. As we wrap up here, just to reiterate, um, really a one-stop shop with Marshall Reddick. Everyone that you need to successfully evaluate and invest in investment property in place, and equally as important as to where you're investing is who you're working with, including myself as your advisor, our preferred lender, Reed Hazard, Seth as your regional rep or realtor out in Austin, and every other key player as well. Like I said earlier, I highly encourage all of you to hop on our website, check out the properties available, taking a look at our Learn tab, and just exploring, doing your due diligence, getting to know more about residential real estate and different markets that may suit you as a real estate investor. And definitely know who you're working with. Check out our reviews online. Check out what other clients are saying about us, about myself and Seth specifically, about Marshall Reddick Real Estate.
Yeah, we both. I know at least I'll have my profile on Zillow. Looks like, right, Daniel?
Yes, correct. Mine as well. So you can check out our Zillow reviews, Yelp reviews. Just a quick snapshot of my specific contact information. We'll make sure to get you Seth's as well in the follow-up, but we're more than available for questions. We would love to hop on a call, get to know about your specific goals, what you're looking for a real estate investment. So feel free to shoot us a call, text, email. You can also schedule a consultation through the link in red above. Um, Other than that, we'll be following up, getting your questions answered in the next several days. But once again, we really, really do appreciate you all taking the time out of your evening to be on this webinar tonight. Hope you gave you a little more insight into a market I'm sure a lot of you have heard a lot about. And Seth, I just want to say thank you for taking time out of your day to share your market with us as well.
Absolutely, I'm happy to, and I'll be happy to hop on a call with anyone who's curious about the Austin market. Say hello.
All right, perfect. Sounds good. So thank you all, Marshall Reddick investors. Hope you all have a great evening. We'll see you on the next webinar.